Thursday, September 24th, 2020, Monaco 64, home of alternative economics and contrarian views. We're going to look at why these central bank digital currencies, that's just a euphemism for more debt and for more inflation and for the eventual destruction of all these fiat currencies. Yes, they're going to be called central bank digital currencies, but in the end of the day, they're backed by debt, just like the present fiat currencies are backed like. Before we do that, let's quickly look at where things are in terms of the market. Yes, gold and silver have been caught in this downdraft of the markets, stock markets. They've been caught a bit in the downdraft of the currencies, or in reverse, they've been caught in the strength of the fiat dollar for the moment. But I want to put things a little bit into perspective. So we're going to look at how the stock markets have fared year to date. Up until yesterday, the Dow was down 6.22% year to date. S&P was up 0.19%, and the Nasdaq was up 18.5%. So now let's look at gold in US dollars. Taking the closes from the last day of 2019, gold at 8 a.m. London today was up 21.6% on the year, and silver was up 21.47% on the year. In British pounds, doing the same exercise, gold is up 26.5% year to date, and silver is up 27.6%. I also want to read quickly something that Alistair MacLeod said to Eric King of King World News yesterday. Eric, I welcome the smashdown in gold and silver because it is probably the last opportunity for ordinary people to acquire more real money cheaply before paper currencies increasingly lose purchasing power and move towards a final collapse, which is increasingly certain. The psychology of a sudden decline in prices is designed to hit investors hard, but we must not forget that physical gold and silver are being hoarded because they are sound money. So our response is very different. It is to welcome the opportunity to buy more while clueless investors are panicked into selling. So there you go. So quickly look at where we are right now in the markets before I go into the central bank digital currencies. It is 8:36 a.m. London. We've got gold 1856.50. That's down 6. High's been 1870. A low 1848.60. Silver is at 22.20. The low's been 21.64. I guess you never know. We could go lower. We could go to 21.15, 21.20, which was a key resistance we broke earlier this year. And it was from the break at that level that we saw silver motor up to almost 30. So it could be the test of the breakout level. Who knows? The Dow is down 40 points. S&P down 5. Nasdaq 100 future down 38. So the markets are quite steady. It might be a lot higher or a lot lower when you watch this video. I do edit the video and then I have to publish it, of course, into YouTube. It takes a little while and the markets are pretty choppy. The FTSE is down 72 points at 58.33, down over 1%. British pound is unchanged, 127.24. Euro as well, unchanged, 116.60. And the dollar yen is down 0.1 at 105.26. Crude oil is still quite strong, surprisingly. It's at 39.60, almost 40. You'd expect crude oil to be a lot lower with the stock markets doing what they did. After all, yesterday we saw a drop of 525 in the Dow, 78 in the S&P, and 3% in the Nasdaq. And that's why I would have expected yields also to drop and bond prices to rise, but they haven't. And that is not a good sign for the overall financial paper system. 10-year yield is still stuck here at 0.67, pretty much where it's been all week. with the stock market continuing to go down. So that's not a very good sign, I would say, for the overall markets. So central bank digital currencies, there's a lot of talk that the Federal Reserve will be issuing currency, digital currency, directly to every American, and they'll have an account with the Federal Reserve Bank. Yeah, that sounds really great, doesn't it? You're playing with the big boys. You got an account with the master of the universe, the Federal Reserve. But I've read this article here on Zero Hedge. I'll put it down in the description. You can read it. I'm not going to go through the whole thing. It says, in unprecedented monetary overhaul, the Fed is preparing to deposit digital dollars directly to each American. Well, it's going to come at a cost. It's not going to be simple. The Fed's not just going to be sending like digital dollars to you out of thin air. Well, it is out of thin air, but it will come at a cost to the taxpayer through even more debt, U.S. Treasury debt. They're going to buy these bonds, so-called, I don't know what they're going to call these bonds, maybe Weimar bonds. They'll buy these Weimar bonds from the U.S. Treasury. It's just going to be a paper transaction very quickly, instantaneously. You're going to have Jay Powell talking to Mnuchin, and Jay Powell's going to go, hey, Steve, why don't you issue $1 trillion in those Weimar bonds, and we'll buy them. And Steve will say, okay, great, let's do that. Next, or whoever is going to be Treasury Secretary next. It could be Larry Summers for Joe Biden. And Larry Summers will call Jay Powell and say, Jay, we need $2 trillion to be sent to the taxpayers. I'm going to issue $2 trillion in Weimar bonds. Jay Powell says, oh, no problem. Put the phone down, and then they're going to send it to you. And these bonds are supposedly going to be zero coupon, so the Treasury won't have to pay for it. So it's basically like creating money out of thin air. That's all it's going to be. Yes, it's going to go to the public. Finally, the public is going to get its QE, but all that's going to do is destroy the value of that currency. And the very wealthy, of course, they're going to protect themselves as they always can through real assets, through commodities, through precious metals. So that's why it's exactly the wrong thing to do right now. And we're seeing that this health crisis is just getting worse. It's getting worse here in the UK. And I'm not saying it's getting worse in terms of deaths. It's getting worse in terms of how these governments are managing it, how they seem determined to really bring the economies of the West down with it. And I think the same thing is going to happen in the US, unfortunately. And they're going to be forced to do even more deficit and fiscal spending. And with that, I wanted to talk about the CBO, the Congressional Budget Office. They've come out recently with some long-term outlook, the 2020 long-term budget outlook. I think it's still very conservative. It's going to be even worse. If you look here at this chart, for some reason, after the pandemic, they see this federal debt held by the public level off. I don't understand. But you look at the projection from last year, after 2019, they don't see the debt level off. So I'm not sure why they think after a pandemic that we've had now, or during the pandemic, after a recession that's not going to get better, in my opinion, how they can see that leveling off. So I think they've underestimated it again. They were looking for, I think, 144% debt to GDP by 2049 last year. This year, they've moved it up to 195%. You can see that the CBO's projections are always very conservative in terms of red ink. I'll give you another example. Back in 2010, they were forecasting the budget deficit for 2019 to be 3%, as you can see here, for 2020 to be 3%. And for 2011 to 2020, they projected 3.2%. So, and you can see here these current forecasts of budget deficit, which is the bottom line here. It's never going to get back above minus 5%. So we're never going to have a budget deficit less than 5. And it's probably going to be a lot worse. You can see their projections for 2010 to 2020 were not reached at all. Even before the crisis this year, the budget deficit was around 5% of GDP, with the greatest economy in the world. And do we really expect the economy to get back to how it used to be before this crisis? I don't think so. So I think you can add on a lot more to this deficit. It's going to be 1 or 2 percentage points more, the budget deficit. So there's no end in sight to the amount of debt created. We're going to see the Federal Reserve as well now inject Weimar style monetary stimulus directly to the American people. Yeah, and you can say all you want that they're not going to print the money, that it's going to be digital, but it's still going to have the same impact as banknotes, right? So there you go. No end in sight to the deficit spending, to the national debt. It's going to get even bigger. So why is the CBO debt to GDP lower than 100% right now? They're just saying that it's going to be 106. Well, that's the one held by the public. It doesn't count all the national debt. We know the national debt, the whole national debt, of course, is fast approaching 27 trillion, which is already 136.78% of GDP. One the CBO looks at is all the national debt held just by the public, not by government agencies or the Federal Reserve, I guess. So there you go. Keep a hold of your precious metals. As Alasdair Macleod said, it's sound money. Do you really want to get back into the banking system that is so fragile right now, into the financial system that's so fragile now? Do you want to have counterparty risk by not holding physical gold and silver? GLD has loads of counterparty risk if you read the prospectus, and they have conditions as well where they will not deliver your gold, acts of God and things like that. So you need to think twice about ETFs, I would say, because they're no substitute for the real thing. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, and these other platforms below here. I wish you all a great day. Take care. Bye.